All right, what's going on, people? We are back for another one. This is going to be a little bit more of an educational segment here where I am going to discuss recession fears. And I really want to talk about what actually is a recession, because the word is thrown out all the time, but what is the definition? How do we know if we're in a recession?
Your assimilation to the collective will begin by joining the Even I Can Trade Discord. Link in the description of this video. You will join a tier based on your distinctiveness, or you will join the general area with no economic impact. Excuses are irrelevant.
I was looking up some data and I wanted to kind of break it down to something that's very simple. And I found this kind of diagram right here. And usually, at least when I think of recession, I'm thinking of massive job losses, massive layoffs, the unemployment number through the roof, businesses going out of business, housing prices falling, people losing their homes, all this kind of stuff. And come to find out, that's not necessarily a recession. That's a pretty severe recession. But this kind of talks about the hallmarks of a recession. Now, there is no one definition that I could find. I also found a definition of it's just 2/4 of negative GDP growth. And if that's the case, we're coming out of a recession right now. But it really just depends on where you look. But this is, I thought this was pretty fair because it's using previous examples of what we call a recession and using that to say, okay, this is what recession actually looks like. So you've got unemployment rising, you've got people losing their homes, which means housing prices are going to fall. You've got less job openings. Young people can't get a good job after school, so there's no job openings. You've got consumer purchases falling off, so there's a number for that we can look at. And you've got businesses going bankrupt, shrinking business orders, shrinking business numbers in general. So we can look at all of those numbers. And the reason I'm really doing this segment is because so many people are predicting that we're going to be in a recession and have been for the last year. That is starting to get my my alarm bells going, where my contrarian alarm bells going, where it's just okay, so many people think that we're going into a recession. Are we really going into a recession? What it even is? Do you even know what a recession is? So this is the month of January 2023. As far as the economic calendar, we're about 2/3 way through January right now. So we've got a lot of numbers released. So I wanted to take a look and see how January is shaping up to see, does it meet the criteria of, are we heading into a recession? Does it look like that based on the numbers? So we start up here early January. We've got our job openings. So remember, that was one criteria. People can't find jobs. So our job opening numbers, are green right now, and better than expected. So 10.46 million job openings right now, expected 10.04. Now, if we look at this, job openings are falling, I guess, but this is what they were. So, they really expanded in 2022, and it's probably making up for this coronavirus stuff. And this is a point that I've been meaning to make. The coronavirus really is just a unique situation. We've never had that in the modern era before. We've only had one pandemic, and that was back in the 20s or something like that. Nothing in the modern electronic, computer age we've never seen anything like the pandemic, global pandemic, right? So that's got a lot of downstream effects that, it's almost impossible to predict what all of that stuff, what's going to happen after that, right? So you're going to see a lot of wonky stuff. So this is during the pandemic, obviously, and then this is the kind of wave reaction after the pandemic is everybody's trying to like, okay, compensate for this. And we're falling off from that number, but that's still a lot. And if you kind of draw a line to the job openings, I mean, we're kind of right on track, even above where it seems like we would normally be had there been no pandemic. From what I'm seeing, I mean, unless you're seeing something different, if I'm expecting recession, I'm expecting like a steep, I'm expecting this, right? That looks like recession to me. This doesn't look like recession. This looks like, okay, we had a dip. Now we're making up for the dip. Now we're kind of normalizing. To me, I could be wrong, but I guess you could argue that we have falling job openings. You could make that argument, I suppose. Let's see. Manufacturing prices. They said no. This is an inflationary number. So manufacturing prices is talking about the basically manufacturing inflation, and this is something the Fed is trying to fight. So I'm not surprised that this is a red number and this is coming down at all. So as they were raising rates, I mean, this is definitely going to fall, right? This is what they want to fall. This is what they're trying to get to fall. So this has to do with the cost of goods, basically. Let's see. Vehicle sales. This could be another one, maybe. I mean, vehicle sales has fallen, but I mean, it's not like, I mean, this is just off a cliff. And you had the reaction, and then we're less than normal. I will say that we are less than normal, but we've been there for a while. So is this the new normal now? Maybe, I don't know. But it's not out of whack based on, you know, the last year, I guess. Cool. Let me see. Payrolls. So this number is our payrolls. This is way better than expected, but this is not a government number. This is ADP, but still way better than expected. Let's look at the history. This is really hard to tell because we got this outlier. Let me see if I can zoom in and get past that. Maybe it'll. Okay. So payroll. How many people basically are employed, I guess, or something like that. And let me just say, I'm not an economist. This is just me looking at this stuff. I have no formal training of any kind in this stuff. This is just me looking at it based on what those recessionary numbers say, right? I'm more of a numbers guy. So payrolls are falling, but not in the negative. This is what was added or subtracted to payrolls that month. So falling ish, but not in the negative except for right here. Yeah. All right. Have we been above forecast? Mixed bag, but it seems to be kind of stable over the last couple of months at least. So payrolls is kind of flat. Earnings, I guess you could say earnings is another one. This, I wouldn't be surprised if it's falling because they're trying to fight inflation. Earnings is part of inflation. So let's take a look at this. Looks kind of flattish to me. Doesn't look any different than this stuff over here to me. So that's that one. Unemployment rate. So this is a big one that we should see this, like, you know, starting to roll over. Let's see, is it rolling over? Let's get down here so we can see. Well, I mean, if you take it all into context, no. The unemployment rate is falling. This is obviously, this is history. I'm just looking over here, but my mouse is over here. But unemployment rate's falling. It seems to have stabilized around the 3.5 number to me. Doesn't look, I don't see a rising unemployment rate at all. I mean, obviously coronavirus, but it's been falling ever since, and it seems to have stabilized ever since like early 2022. Not seeing any evidence whatsoever of rising unemployment. That is a key metric of a recession. And that coincides with job openings, right? So they're having trouble finding people to work because there's a lot of job openings, low unemployment. Services this is more inflation stuff, so we definitely expect to see this falling with rising rates, and it has. Let's see what other stuff looks important here. Obviously inflation, they're fighting inflation right now. And are you really going to have inflation in a recession? I don't think so. No, you're not. Prices aren't going up during recession. Stuff is on sale during recessions. Nobody's buying anything during a recession. And I understand that, they're saying that this is a Fed caused recession that's going to come. But again, I'm trying to find numbers that substantiate that. So inflation doesn't really show a recession, but you don't have rising prices during a recession. Yeah. Unemployment claims, this is another kind of recessionary indicator. Up is bad, down is good. So it usually, before the demic, hovered around, what is that? Like 273, whatever that number is. And now we're lower than that. Yeah. If am I looking at this right? Yeah, that looks like it used to, for the most part, unless I'm tripping. This is really a low number, like 190. If I go back to before the demic, we were clearly in the 200s to the 250s on average, and fast forward 200s to the 250s. Okay, well, that looks normal. I don't see any increase there. Do you? So looks normal. Let me see, consumer sentiment. So this is another recessionary kind of thing. Consumer purchasing falls off. So consumer sentiment has to do with their sentiment towards, are they going to buy stuff? And I will say that has definitely fallen, but this is pandemic numbers. And this is during like a historic bull market, like for real. Let's see if we can get before that. So back in 2008, prior to the recession, it was up here, then it just fell off a cliff. Over 2007, down into the dumps. So looking here, this is pandemic stuff. Now this has fallen down in the dumps, I will say that, but it is rising. It is rising. Not something that I would say looks like we're headed into a recession here. I would say it looks like we're coming out of a recession based on looking at this. But that's just me. Tell me where I'm wrong. Let me see. Manufacturing index. This is probably going to be affected by the rate rises. And so, yeah, that sucks. Is it uniquely sucky? It's pretty bad. But like I said, this has probably more to do with the rates going up. More CPI stuff, so inflation is falling, obviously, rates are rising. Recessionary stuff. Production is going to be inflation. Manufacturing, that's going to be inflation. Unemployment claims again. Still falling. Not anywhere close to, not even close to 300. Um, is that giving like we're heading into a recession to you? Not to me. Maybe if I go back for, look at this. This isn't even recession. This isn't even recession, and you're in the 350s, 400s, stuff like that. Back at 08, 07. Let's see. This is given recession. This is given like, okay, it's rising, it's rising, it's rising. Let me call for a recession. This 300s, 350s, 400s. That to me is given like, okay, it looks like we're headed towards a recession. This, even if I take out the big outlier, looks like we're coming out of a recession to me. Trying to take out the big outlier, but that is given like, okay, we're coming out of a recession to me and stabilizing. What else? Existing home sales. Again, that's another thing. People lose their homes, right? So people can't be losing the homes if they're buying the homes, right? So let's take a look. Let's see, home sales. It is falling. It is falling. Let's see if we can get some historic context back to the last one. 2007-ish. Okay. Falling. So this, I will again caution to say, home sales have a lot to do with interest rates, mortgage rates rising. I would definitely expect home sales to be falling. Before they started raising rates, it was looking pretty decent, better than before the demic. But yeah, this is gonna look like that when you got higher interest rates for sure. But in everybody's defense, this definitely is falling, but that doesn't mean people are losing their homes. They're just not selling their homes. I don't know if they have an index for people that lost their homes. PMI, that's going to be more inflationary stuff. Okay, so we haven't had reporting beyond this yet, but GDP is a big one. Let's actually take a look and see what GDP has been. GDP, so that's another one. Does it say GDP here? I don't think it says GDP on this one, but GDP is a big one for, oh my goodness, predicting recession. I should have got that put, man. Sitting here recording with y'all. All right. So GDP does not look that different to me. I mean, you got this crazy stuff right here, but what's that, 2.8 or something like that? Looks pretty average. Again, it looks like we're coming out of a recession because we had negative GDP the 2 prior quarters than this. So unless we get a negative print in January, and we're expecting 2.5. So if we get, 2.5 or above, kind of looks like we're coming out of recession to me, not going into one. Let me see if there's anything else that stands out to me. Maybe the consumer confidence. I think we already had one of those earlier, something similar. So looking at all of this in totality, to me, all of the non-inflationary related numbers, like unemployment claims, job openings, stuff like that, to me, I'm not getting going into recession. I'm actually getting coming out of a recession, as it like we were in one and now we're kind of stabilizing. Now these numbers could roll over starting today, for all I know. Another thing that you'll see as a hallmark of recession is falling interest rates from the Fed, because they're trying to stabilize the economy, and that ain't it right now. But we'll see, man. We'll see. I'm just not getting, yeah, we're starting to roll over into a recession right now. I'm getting like we're coming out of it based on the numbers that I see. But I am open. I'm not an economist. I'm not formally trained. I'm just a guy that's looking at numbers and seeing like this looks like that. So that's what a recession apparently is. And let me know. We can fight about it in the comments. Like I said, I'm open, but that's just what I see. So let me know what you think, guys. I'm out.